If you're holding 8,137 HBAR right now, you're probably wondering what kind of return that could bring you by 2026. Is it just another altcoin riding the hype cycle? Or does Hedera actually have the tech, adoption, and roadmap to deliver real gains? In this video, we're breaking it all down: the price math, the enterprise partnerships, the upgrade timeline, and how high HBAR could realistically go. And, of course, we'll calculate exactly how much your stack could be worth in a range of market scenarios. But before we continue with the video, I just want to say, if you're looking for a solid exchange to trade crypto, I personally use WEEX. It's reliable, has deep liquidity, super low fees, and a massive selection of coins. Right now, you can claim up to $30,000 in sign-up bonuses and trade with up to 400x leverage. Best part? No KYC required. Use the link in the description to sign up and claim your bonus today. At the time of recording, HBAR is trading at 25 cents, with a market cap of $10.8 billion. That gives your 8,137 tokens a current value of roughly $2,034. It's not a life-changing amount yet, but let's talk about what would need to happen for that number to seriously grow by 2026. Hedera's technology is fundamentally different from most Layer 1 blockchains. Instead of using blockchain architecture, it runs on a hash graph consensus model, a much faster, more scalable approach to distributed ledger technology. The network already boasts over 10,000 transactions per second, extremely low fees, usually around $0.0001 per transaction, and near instant finality. That's not just fast, it's practical for real enterprise usage. On top of that, Hedera is governed by some of the largest companies in the world. Google, IBM, Boeing, Dell, and Standard Bank are all part of the Hedera Governing Council. These aren't just marketing partnerships. They operate validator nodes and help steer the direction of the network. That's a massive level of credibility and decentralization that most crypto projects simply don't have. But what really separates Hedera right now in the current cycle is what's coming. One of the biggest upgrades is HIP 735. This proposal is designed to optimize Hedera's smart contract performance, specifically by introducing more efficient memory and resource management. In plain English, this means dApps will run faster and cheaper, making Hedera more attractive for developers building tokenized assets, DeFi apps, and real-world asset platforms. Another huge development is sharding. Hedera has been working toward introducing native sharding to the network. If successful, this could scale the network to millions of transactions per second, not just 10,000. That would make it potentially the most scalable Layer 1 in the entire industry, fully ready to support global supply chains, finance systems, identity layers, and even government services. So let's get into the numbers. What happens if HBAR reaches different price levels by the end of 2026? If HBAR climbs to 50 cents, which would be a 2x from current levels, your 8,137 tokens would be worth $4,068. That would put Hedera's market cap at $21.6 billion. That's very achievable in a strong bull market, especially considering much less capable projects have hit that mark purely on narrative. Now, if HBAR returns to the coveted $1 level, a price point that many holders have been waiting years to see, your bag would be worth $8,137. That would require a market cap of $43.2 billion. At first glance, that may sound high, but let's be realistic. During previous cycles, coins with far less utility have flirted with or surpassed $40 billion valuations. If Hedera delivers on HIP 735, successfully implements sharding, and continues landing enterprise use cases, that level is not far-fetched at all. Let's push it a bit further. Suppose Hedera reaches $1.50 by the end of 2026. Your 8,137 HBAR would then be worth $12,205. That would mean a total market cap of $64.8 billion. It's ambitious, yes, but not impossible, especially if institutions begin onboarding to tokenized finance systems and carbon credit markets, which Hedera is already involved in today. And when you dig into the tokenomics of HBAR, things start to get even more interesting. Unlike many other projects, HBAR wasn't launched with a massive insider dump or pre-sale scam. While the token distribution is not perfect, no project is, it's been relatively responsible compared to the Wild West of token launches we've seen in recent years. Yes, a large chunk is still in treasury and development funds, but the team has been gradually releasing those funds with transparency. That means we're less likely to see unexpected unlocks or huge dumping events. Now let's talk about adoption. Because here's the thing. It's easy for any crypto project to talk about adoption, but very few are actually being used. Hedera, on the other hand, has actual volume. Not trading volume on exchanges, transactional volume. Billions of transactions have occurred on Hedera over the past year. In fact, at one point in 2024, Hedera was processing more transactions per day than almost any other Layer 1 network, and most of it came from real applications. The HBAR Foundation also deserves credit here. It has been pouring capital into ecosystem growth, funding projects in DeFi, sustainability, NFTs, CBDCs, and enterprise APIs. One example is the partnership with the International Organization for Standardization to help define how sustainability data gets shared across borders using Hedera's infrastructure. That's not just a crypto narrative, that's global infrastructure in motion. And here's where things really get interesting. If we assume HBAR hits $2.50 by late 2026, an extremely bullish but technically possible target, your 8,137 HBAR would be worth a stunning $20,342. The market cap at that point, roughly $108 billion. That would likely require Hedera to be in the top 5 coins overall, something it has never achieved before, but could if institutions embrace tokenization at scale and choose Hedera as the core infrastructure. Let's say instead, the market stays more grounded. HBAR might only hit 75 cents by 2026. Still a strong move. In that case, your holdings would be worth $6,102. And with a market cap of $32.4 billion, that would still be a huge leap from today. This mid-range target is often overlooked by traders looking for either moonshots or nothing. But for a long-term investor, this could be a smart exit zone or a strategic profit-taking level. Now, beyond just dollar values, we should look at the actual use cases Hedera is enabling. For example, the healthcare industry has started experimenting with using Hedera for patient data sharing, not storing private data on-chain, but using tokenization as a method to verify and timestamp data transfers. This matters because healthcare is one of the most regulated sectors in the world. If Hedera becomes the go-to layer for these kinds of applications, the demand for HBAR, used to pay transaction fees, will scale massively alongside it. There's also the advertising industry. Imagine a system where ad impressions are tracked on-chain in real time with zero fraud. Hedera has already partnered with companies in this space, and the technology works. That opens the door to billions in untapped potential revenue. And if even a fraction of that demand runs through the Hedera network, it adds real utility to the HBAR token. Let me know below. What's your realistic price target for HBAR by 2026? Are you aiming for a $1 exit, $2, or are you planning to hold even longer? Thanks for watching. Stay patient, stay sharp, and I'll see you in the next video.